question 37, we're looking at our first instance of depreciation. Now, when you see the phrase straight line depreciation, it means we've got a constant amount of money being depreciated off some goods. Now, if you're in business and you need to replace equipment after a certain amount of time, the federal government gives you a tax benefit for claiming depreciation. So it's different amounts for different items. A car will depreciate much more rapidly than, say, a lounge suite, but you might have a lounge suite that's a welcoming item, a comfortable item for your customers. You don't want a ratty old thing after 10 years, as it's not good for business. Before we commence this problem, just a little note about some of the letters we're using, the variables. C is the cost value. What did you originally pay for the item? V is the current, sometimes known as the book value. N is the number of years. And the D is the constant depreciation. So it's a constant amount of money. Shortly, we'll look at another form of depreciation called reducing balance, which is a changing amount per annum. Now let's get stuck into this question. I want to know my value of the item, so I'm after V. My depreciation in this instance is $450 per year. 5 years, the cost was $3,000. And the book value, current value, is the unknown. So V in this case is equal to minus 450 times 5 years, and add that to the original or the book value of 3,000, and we soon see that's $750. Now moving quickly on to question C, or part C I should say. Always write down the equation. As these are pretty straightforward, I won't articulate which is which on the right hand side. Constant 600 per year, that's my depreciation figure, 7, and then add that to the original 5,500. So $1,300 is the value after that time. When it comes to part E, I've got to find out what the 10% of the purchase price is. So I've got to find D first. So D in this instance is 10% of 9,000. D is equal to $900. Once I've got that, I can then just simply plug into the equation to find the value of the item after that depreciation. A reminder, depreciation is allowed by the Australian Tax Office, and you can either depreciate under a straight line fixed amount per year, and there are various listed percentages for that, or you can do a reducing balance situation. It's the amount that you depreciate that you will receive a portion back as a tax break at the end of the financial year. So just quickly working that down, yes, I did forget the equation. You can see that the book value at the end of that time is $3,600.